Stocks see a strong bounce after a sharp sell-off on Monday. Capital goods and power lead the gains, while FMCG and oil and gas lag. Mid-caps underperformed today.
Bajaj Auto makes a strong statement with its hefty 10,000 rupee per share buyback price and near 5,000 crore allocation. CFO Dinesh Thapar says the pricing reflects the company's better than expected show and promising outlook.
Crude prices slump after Saudi Arabia cuts prices for Asia to a 27-month lows. Rise in OPEC output, US drilling and higher supplies from Angola, Iraq and Nigeria also exert pressure on crude prices.
And Polycab slides on IT evasion concerns while fears of the Sony deal falling through hurt Z, but GMDC jumps on getting a nod for expansion at its mine, and IRB infrastructure gains on posting strong toll collections.
Hello and welcome to Business Lunch. It's Tuesday afternoon. I'm Nisha Podar. As always, with me is Pavitra Parekh. So, Pavitra, after a shoddy, work yesterday, today the market is really looking exuberant. So probably the steam is off on the market. And Nifty 50 at lunch hour is looking quite fueled. In fact, let's take stock of the markets at this point, almost at the high point of the trading session. Nifty 50, 21,700 levels have been mounted, and it's a gain of about 200 points. When we talk about Sensex, 640 odd points of gain and up closer to 1% gain. Bank Nifty, that is also pretty much in line with a slight underperformance to the key indices, 0.8% odds up, and mid-cap universe, that is mid-cap index, 0.75% up in trade. So it's a pretty picture, all in line, in tandem, showing a huge amount of exuberance as well as buying interest in the market. Advance decline ratio also in favor of the advances with a huge margin, almost two advancing stocks to every decline. And when we talk about some of the percentage gainers, in terms of percentage, Hero MotoCorp is the top gainer today, and some of the other auto companies are also putting their might behind Nifty 50, with the big boys really rallying in, and some of the IT as well as Tata Steel from the metals pack, all of them doing well. Very handful of really tepid, weakness seen in some of the counters, especially coming in from consumer discretionaries like Britannia and Nestle, which are the top losers on Nifty 50. Pavitra.
So good-looking screen, like you said. Of course, at the start of the day, we knew this is going to be a good session because of the handover that we got. But the key question was, will it hold? Will it sustain? And not only is it held, it has only moved higher. So over the course of the session, up until now, up until 1 o'clock, we've seen a 120-point kind of move on the Nifty, which is looking very solid. A lot of action in the broader markets as well. What's doing very well, you have the auto pack, which is doing very well. So, names like Bajaj, Hero, Tamo also all seeing good gains today. You have the entire IT pack fueled by that almost 2.3% kind of move on the Nasdaq index. So some of the larger names in focus over here. And then you have a lot of the real estate companies which continue to do well. So names like Ashoka, Purvankara, all of these doing well. These that our directors putting up right now are some stocks which are, from the broader markets, but seeing huge moves. You have a very positive advance decline, and you have big moves in names like IRB, GMDC. I'm just naming a few, but a very active market in that sense. On the downside, also, there are some stocks which are losing. So names like Polycab, Z Entertainment, down a little bit, and then you have the consumption pack like Nisha pointed. But all in all, this is a good looking screen. So let's kickstart the show now by talking about one stock which is doing very well. I'm talking about Bajaj Auto. This stock is moving higher after the company approved a 4,000 crore buyback at the price of 10,000 rupees per share. Now, this price is a 43% premium to yesterday's closing price as well. And earlier in the day, we spoke to Dinesh Thapar, the CFO at Bajaj Auto, to really learn more about their plans going forward. Listen in to some excerpts.
Essentially about 4 million shares that we are looking to mop up as part of this buyback. It's about 16% of our paid-up share capital and free reserves, and therefore this is subject to shareholder approval, and we'll run through that process between now and the middle of February. We reflected on this and had an extensive discussion at the board, was to really use this as an opportunity to reflect on our performance over this last little while, which has really been quite compelling and really outperforming in terms of the broader industry. will not end up diluting because we think, with the current pricing that we've put out, it presents a very compelling proposition for investors and shareholders to really make their full entitlement. And therefore, if that was to be the case, the promoters will tender in line with their entitlement. To that extent, I expect post buyback shareholding for them not to be diluted. In fact, it might creep up slightly because we've also got a 15% reservation for small shareholders over here. So when you do the maths on a post-buyback percentage, the promoter holding, assuming everyone tenders in line with their entitlement, should be at about the same levels or a tad higher.
All right, so that's a big story on Bajaj Auto. But moving on to another big stock impacting story of the day, and the spotlight is on Z Enterprises. The stock is under pressure after reports suggest that Sony could call off the proposed $10 billion merger. Remember, it could have created the largest media and entertainment company in the country by way of M&A, and a few days are still left in the grace period. Hormaz, our expert on mergers and acquisitions, is here to tell us more. Tell us, Hormaz.
Well, it was the standpoint this time around between Z and Sony. This back and forth has been on ever since the deal was signed in December of 2021. And the recent reason for the clash is a Bloomberg report that came out yesterday evening, which said that Sony is planning to pull the plug on this $10 billion merger that has been in the works over the last 2 years. And it is planning to send a termination notice to Z Entertainment by the 20th of January. Now, what is the reason between the recent tussle is that Sony does not want Puneet Goenka to become the CEO of the merged entity, and this is because of a regulatory probe that is currently underway against him. And CNBC-TV18 has not independently verified these reports. Now, you may recollect that in August of last year, SEBI had barred both Subhash Chandra and Puneet Goenka from holding any key managerial positions in Z Entertainment, something that Puneet Goenka appealed against. And this order was quashed and overturned by the Securities Appellate Tribunal, or the SAT, as a result of which Puneet Goenka was reinstated as the MD and CEO of Z Entertainment in October of last year. Now, we spoke to analysts as well this morning, and they mentioned that it is too early to assume whether the merger will be called off, and Puneet Goenka would not want to risk the merger, and we should wait for more clarity to emerge on this issue. But nonetheless, the stock is under pressure. It's slightly off the day's low, but still down 8.5%. It's the biggest single-day drop it has seen since April of 2021, and as a result of which the market cap of Z Entertainment today has fallen below 25,000 crore rupees. Back to you.
All right, Hormaz, thanks a lot for getting us all of those details. That is on Z Entertainment. But with that, let's move on and also bring you an exclusive now. Nigel spoke to Coal Secretary Amritlal Meena to understand how Coal India plans on meeting the need for coal, because demand has, of course, seen a big spike. He also gave an outlook on how Coal India's volumes are likely to pan out going forward. Listen in.
Last year, Coal India, as against target of 700 million ton, they have produced 703 million ton in FY23. Now, as far as FY24 is concerned, the target is 780. Coal India is showing a growth of about 12%. So, we are quite hopeful that Coal India will achieve its target. For next year, the target set up for CIL is 850 million ton. We had earlier a plan of 1 billion ton of the coal production for CIL, but now we have planned for 1.25 billion ton of the coal production for CIL. 1.25 billion ton by we have plans for next 4 years. So there are no plans for the price increase of the notified price of the coal. There are no plans as of now. Whatever is there in the public domain, you and through you all viewers are aware of. Beyond that, on these commercial aspects, I would not like to comment.
All right, so that's Coal Secchi commenting on the prices and the way forward. Now we slip into a short breather on Business Lunch, but before we do that, remember the union budget is less than just 30 days away. What is your wish list for the Finance Minister? Tell us. In fact, presenting the CNBC-TV18 budget ballot box coming to a hotspot near you. Now, we will be placing these ballot boxes at popular public spots like malls, colleges, theatres and others across major cities. And we will also be asking the newsmakers who drop into our studio for their budget wish list. So come, join us and tell us what is your top budget wish for the finance minister. Drop your wish list at the CNBC-TV18 budget ballot box near you, and we will compile them and present it to the finance minister before she presents the Union Budget 2024.
Welcome back. You're still tuned into Business Lunch. Now, we've been talking about all of the equity market action, but there's been big moves in the commodity space as well. Crude prices slumped to near 6-month lows overnight, with Brent now trading around $76 a barrel. This is because of price cuts by Saudi Arabia, which really raised concerns over global demand. We have Manisha here to tell us more about that. Manisha, big cut in crude prices.
It has been a negative beginning for crude oil for 2024, and this is after 10% decline in 2023 as well. Well, there are 5 of 6 reasons which have led to constant decline in case of crude oil prices. Overnight, it has been 3 to 5% of a cut for the crude varieties. The reason number 1 is the Saudi Arabia cutting its official pricing for Asian consumers to the lowest in last 27 months. 1, of course, it's competing with cheaper oil, and 2, the demand is on the weaker side. So is the reason you've seen that pullback in prices. Second is the rise in output from OPEC and allies in the month of December. Remember, OPEC has been talking about cutting output, but the December month has seen 70,000 barrels per day being added in case of crude output. That is pulling down prices. Third is the US drilling itself, which has risen. The rigs have risen to 501, with 20 more in pipeline to be added in this year. And US, in any case, has been producing crude at record numbers at around 13.3 million barrels per day. So there are higher supplies. You are also looking at higher supplies coming in from various African countries like Angola, Iraq, Nigeria as well. Markets also are looking at demand as a bit of a concern right now, because we're looking at weaker numbers not just from US but from Europe and Asia as well. And the other factor is the inventories itself. The US is looking at gas inventories rising up, the distillate inventories are high, and the demand lowest since 1999. And then it also is about the strength in US dollar index and expectation that we perhaps may not see an interest rate cut within this quarter, and the first rate cut perhaps will come in the month of May itself, are some of the many reasons that have led to the crude oil prices declining. So much so that the industry says that sell-on rallies is a strategy that you should be looking at in case of crude prices. $80 a barrel continues to be a resistance.
All right. Thanks so much, Manisha, for getting us details on how the demand-supply dynamic shift has put pressure on the crude oil prices. Let's shift focus to the aviation space, and Indigo Airlines has announced that the price increase for the preferred seats have really come in. So the passengers may choose a window seat, aisle seat, or a seat with extra leg room at an extra cost. For example, the front row seat to cost up to 2,000 rupees. And for the second as well as the third row, all seat types have a flat rate of 400 rupees. Now, remember that this moves comes after the airline took the decision to cut their fuel surcharge.
All right, so that is an important story. I just want to point out that there's a clarification coming in from Z Entertainment, where they are saying that Bloomberg's report of Sony planning to terminate the merger is factually incorrect and baseless. So they're completely denying this. The stock, at the lows of the day was down around 9%. It's already recovered a little bit, but, we'll give it some time. Some more comments from them. They're saying that the company is committed to the merger with Sony. They've also always complied with SEBI's norms, and they're saying that they're continuing to work towards a successful closure of the proposed Sony merger. So that is important coming in on Z Entertainment.
So that's an important clarification coming in on that large transaction, Pavitra, because there have been a lot of media reports on the deal proposed deal being called off by one of the two parties. But remember that 20th of January is the final date when both the parties need to really fix the date for extension if they are going ahead with the transaction. Of course, the proposed merger, all the processes are not complete, and therefore a grace period was being utilized, which is of a month, which completes on January 20th. So that's an important clarification really coming in from Z Entertainment, that the report on the deal being called off or terminated is baseless and factually incorrect. All right. For now, we'll slip into a short breather on the show. But when we get back, We'll get you the excerpts from an exclusive interview with the Starbucks CEO, Lakshman Narasimhan. He's outlining the coffee chain's global as well as the Indian growth strategy. Stay tuned.
Welcome back. You're still tuned into Business Lunch here on CNBC-TV18. Let's bring you an exclusive now. Sources tell us that M&M has closed the subscription for the InvIT listing of its renewable platform, which allows value unlocking and deleveraging for the subsidiary. Nisha, you've been tracking the story. Take us through the details.
So it continues, Pavitra, with our continuous coverage of REITs and InvITs and how this space is really expanding. So from a large conglomerate, Mahindra and Mahindra, remember they have a subsidiary, Mahindra Sustain, for renewable energy, and that has rolled out a private listed InvIT. And in fact, that listing is likely by next week is what sources do indicate. Now, they had given out a proposed offer document with the SEBI, and that particular subscription has been closed at what sources with direct knowledge share with us. So what is the outcome of this subscription? A private InvIT listing, which is called Sustainable Energy Infra Trust, and it has got some of the marquee investors like AIIB has anchored this particular InvIT, and that along with some of the domestic institutional investors will hold 40% stake in this particular InvIT. And also remember that Mahindra Sustain already has a stakeholder, Ontario Teachers Pension Fund, OTPP, which will hold by way of this deal 33% stake in the InvIT. So what we are talking about in numbers, about 2,350 odd crore rupees of equity fundraising has taken place by way of listing this InvIT. And the total enterprise valuation, which includes debt as well as the equity fund raised, is about 6,800 crore rupees. So net, Pavitra, what we are looking at is this 6,800 crore rupees of, in a way, benefit because of this transaction. And then Mahindra Sustain, being a developer, has offloaded and deleveraged to a large extent. So we are looking at it as a value unlocking as well as deleveraging exercise by Mahindra and Mahindra as a sponsor as well as the parent company, and Mahindra Sustain, the subsidiary company, Pavitra.
All right, Nisha, thanks a lot for getting us all of the details on that. We're going to wind down on the show on that note with the news that the markets are in solid form, 190-point gain on the Nifty, so holding about 21,700. Broader markets also doing very well. The mid-cap index is up around 0.7%, and Z that we were talking about after, clarifying on the news that Sony may be looking to call off the merger, they're saying that's not true at all. It's completely baseless, and they continue to work with them, has recovered a fair deal. For now, it's down around 4.5%, but from the lows of the day, we've seen an over 5% kind of recovery on Z Entertainment. With that, we're going to wind down on this edition of Business Lunch. Thank you for tuning in. Mid-Cap Radar up in 2.